Hey, good morning. What a trip yesterday. Let's just recap what happened yesterday. Fed came out at 2 p.m. They said 25 basis point rate hike. Okay, market like that. Spike up, trickled down, spiked even higher. Then Powell came on at 2:30, basically reaffirming, hey, this is what we're doing. We don't really care about the financial stability of certain markets. What we're going to do is tackle inflation. Guess what? There are going to be zero rate cuts by the end of 2023. He basically said that. He said we can possibly continue to raise rates based on inflation. We have CPI and PPI coming out in 2 weeks, and then there aren't going to be any rate cuts for 2023. It was as clear as can be. However, when I look at the Fed swaps rate this morning, what do I see? I see the market is anticipating 50-50 on a May rate hike of 25 basis points. Okay, that's fair. We could believe that. And then after that, the market is anticipating 4 rate cuts by the end of 2023. So Fed Chairman Powell says no rate cuts 2023, possibly 2024 next year. The market says no, we're anticipating the Fed's going to make 4 rate cuts before the end of this year. And yes, we're already in March, towards the end of March. You're talking about April, May. We're probably going to have a rate hike in May, 25 basis points. So then you're talking about June, July, August, September, October, November, December. 7 months, the market is anticipating 4 rate cuts. So somebody is blatantly lying. The market happens to think we're going to see 4 rate cuts. So here, this is the scenario, right? The Fed raises rates and said more hikes are possible. Yeah, okay, that's believable. But the bear case scenario future says no more rate hikes, meaning futures are ripping this morning because the market, if you look at the Fed swaps rate, it says no more rate hikes this year, and you're going to have 4 rate cuts by the end of 2023. Okay. But the Fed came on yesterday. Powell came on yesterday, and he said, yeah, possible additional rate hikes. Okay. Now the market says no more rate hikes. Fed says, yes, another rate hike, possibly more, depending on what's happening with inflation. The market says 4 rate cuts by the end of the year, 100 basis points. This is what the market is telling you. You look at the Fed swaps rate, and that's why futures are actually going up. However, the Fed said yesterday, Powell said, yeah, we're not looking at any rate cuts for 2023. So they don't expect any reductions. But futures see 4 rate cuts. So markets are saying, what are they saying? That the Fed is lying. Oh my God. So what's going to be right? I mean, this is the same market that was wrong so many times. The Fed kind of says something and goes for it. Okay. So let's talk about the SPY, and let's talk about what we saw yesterday afternoon, but the dark pool levels. Okay. There was 2 billion reported exchanged at 398.76. Okay. Makes sense. We dropped down to 392. Okay. There was 1.5 billion of SPY reported yesterday, which are pretty large levels at 392.20. So that's the first level I'm looking at today, 392.20. And yes, I know we closed at 392.11, and right now we're at 394.12. But if you look at what happened yesterday, and let's pull that shit up, okay? Let me just add it to the stream. Boom, there it is. Okay, so what am I looking at? Okay, I've got the 5-minute, but we can even look at the 3-minute, okay? Fed Powell, they come out 2 p.m., they say 25 basis points. Everybody knew that. We see average volume. Yeah, we spike up. Then we have some selling pressure. As soon as the selling pressure hits, what do we see? We see the next spike up, then we see it drop down, then we see, again, buying pressure taking us up to here. But the sell-off at the end of the day was massive. The last 20 minutes, when we dropped from 400, right? We were at 402, dropped to 400, down to 392. You're talking about 2% in literally 25 minutes. Understanding volume on the SPY was so freaking light yesterday until 2 p.m., which is exactly what I said would happen. I said at 2 p.m., expect a spike, a dip, a spike, a dip, and then we're going to finish up one way or the other. So I mentioned the Fed says, okay, let's talk about Coinbase real quick, because a lot of people asked me about Coinbase. I got some DMs. So Coinbase received a Wells notice from the SEC. What does the Wells notice sound? Well, it has nothing to do with Wells Fargo. It's like almost like a wellness notice. Like, hey, we've caught you doing something that we don't believe is ethical or moral or along, the guided lines that we provide as the SEC on how to manage and provide results for your company and everything like that. So here's what happens. Coinbase receives a Wells notice. Then they have 2 weeks. It's usually 2 weeks. Sometimes extensions are offered to provide a written and an oral response to the SEC why the SEC is wrong in part or in whole. So it's basically like, when Hindenburg comes out with a short report and then the company, people are like, hey, why don't they respond? Why don't they respond? Well, Coinbase will respond. They'll have all their lawyers get together in a big room and they have 2 weeks to respond via a written response and or an oral response to the SEC, explaining to the SEC why they are not in why they are following the right path and why they didn't do any wrongdoing. Okay, here's an interesting thing. Dark pool level for Apple. Okay, huge $1 billion purchase and sale right at the close, number 157.83. That happened late yesterday. So I'm watching Apple, and even though Apple's up probably like 1.5% this morning, I'm not believing, because again, if I'm to zoom out, right, let's all just take a step back. Let's zoom out and go, okay, what happened yesterday? Well, yeah, algorithms took over probably around 3 o'clock, 3:15, 3:20, 3:30, pushed the market down. It became oversold. Yes, that is probably the case, which is why we're going to see a dead cat bounce this morning. But if I zoom out, which I just asked you to do, I'm going to look at the overall market. Well, the Fed said 25 basis points. The Fed said they're not going to have any rate cuts by the end of the year. The market thinks 4 rate cuts by the end of the year. So when the market finally irons that out, and understand the market will not have 4 rate cuts priced in a couple of weeks. In a couple of weeks, you'll look and they'll say maybe 2 rate cuts by the end of the year. And that's, again, that'd be more like a compromise. Again, so I'm not believing that. I'm zooming out. What am I going to do? Let's say I want to get into puts. What will I do? I'm going to go out a month or two, meaning stock spike this morning, buying my puts, buying my first entry. I don't care if it's Apple, Google, Amazon, whatever it's going to be. I'm going to buy my puts. Should they go up over the next 1, 2, 3 days, I'm going to enter into more puts, another 25% of my position. So if I'm buying, let's say 20 contracts altogether, I'm going to buy 4 to start. I'm going to let it, if it goes up again, goes against me and it's up 40% or I'm down 40%, I'll buy 4 more. Right? I'm going out 1 month, 2 months. Anyway, okay. Back to coin, because this is interesting, right? Coin's net income, right? We're talking about Coinbase, how they were issued a Wells notice from the SEC. Coinbase's net income in dollars for the years going forward, okay? 2019, 533 million. 2020, 436 million. Okay, pretty slow. 2021, 4.69 billion. Yes, billion. So they go from 400 million to 4 billion. Okay, 2022. That was last year? 1.46 billion. Okay, so it went down from 4.69 in 2021 when everybody was trading crypto. Okay, 2023, which is this year, estimated. Oh shit, we're back under 1 billion. We're at 906 million. 2024, 539 million. 2025, 401 million. 2026, 213 million. Well, shit, yes. Earnings are supposed to go up. Earnings aren't supposed to bell curve and go down. So again, if I'm looking at Coinbase, even though Bitcoin could always rip higher, which will take Coinbase higher, shit, I'm going to go out a year. I'm going to go play leap year puts. I'm going to wait for that Coinbase disaster, which we know is probably coming. Unfortunately, you probably have Coinbase next and maybe Binance after that. Okay. Yeah. I mean, here's my watch list for what I had on my watch list yesterday. Coinbase puts, $60 puts expiring April, and $75 puts expiring this Friday. Well, Coinbase is at $66. Those $2 puts would be worth in the realm of $1,000 this morning per contract, which would be up about 400%. So yes, I was very close to entering those yesterday, and of course, I just didn't pull the trigger. I only have 3 positions on my watch list that I was thinking about entering into. The first one was EXR puts. I would have got in those around $8. They're up to $11. So I mean, my timing is just a little off. It's like I just don't trust these markets. Just like you're looking at the markets kind of looking green this morning. You're like, okay, yesterday was an overreaction. The markets are going to go up today. I would tell everybody, man, just zoom out and wait. Let whatever's going to play out this morning play out, because here's your bull case scenario and bear case scenario for the SPY. Let's get into that, and then we'll talk about the dark pool levels. Okay, so bull case scenario for the SPY. What's likely to happen? Well, it's likely, if you're going a bull case scenario and we're up pre-market and we're sitting at 394. 43. So we're right around a dark pool level. I think a dark pool level is like 394.70 something. So it'll be right around here, which is obviously lower than any point yesterday, except for the end of day sellout. So your bear case scenario is, man, we're likely to go down before we spike up. Again, I happen to think we're trading a narrower range today. So I'm pretty sure we're going to trade somewhere in between like 390 and probably 395. 5-point range, 390, 395, maybe 395 and a half. I don't see it going much higher. So if you were going to say bull case scenario and you're looking to get into calls, which to me would be a little crazy after yesterday's action, you're looking for the market to drop. And then when the market drops to 390 on the SPY, then you're saying, okay, I'll get into calls. Again, extremely risky. I wouldn't take the bull case scenario. Bear case scenarios, shit, we were oversold yesterday. That pump downward at the end of the day was a little overstated. It was all algorithms and things like that taking place. So what's likely to happen? I was like, okay, well, we're likely to spike up. We'll spike up to 395.50, and then we'll drop hard again back to 391, 390. That is honestly what I'm thinking today. Again, I'm leaving my emotion on the door at the side, but I'm thinking what's likely to happen is based on futures, based on the dead cat bounce, we're sitting at 394. I know a dark pool level on the SPY is at 394.76 or somewhere around that. Let's see if I can actually find that. Let's stop sharing screen. Let's see if I get to the dark pool levels and share those with you guys and ladies. Let's go to Discord. Here we go. And see if we can find that dark pool level. Let me see if make sure we add it. Add to stream. Boom. Okay, so let's get over to Discord. These are some mentions by me, my alerts. All right, let's get up there. Bump, bump, bump. Algos and analytics. All right, so let's find the dark pool level. Here's this dark pool level. So we got 395.35 is one of the levels, okay? The other level, 392.67. Well, we went a little under that. So understand the next level under that, which I called out as 390, is 389.99. That hasn't changed in a number of days. So again, if I'm looking at the dark pool levels and I say, okay, I want to see if there's support anywhere, I want to look and see if we make it and what happens right at the 390 level. Above that, 392.57. Above that, 395.35. That's the level I'm focused on because what's likely to happen this morning? We're likely to dump, boom, spike up, right? And we're likely to go right above that dark pool level, probably by 20 or 30 cents. So you would say, okay, 395.35 would be 395.50. That's what I'm going to be looking at. I'm going to be focused when we hit 395.35 all the way to 395.50 or 395.20 or whatever. I'm going to look at the volume because I expect shelf volume to come off the shelf, flood the market, push the market back down. Again, we're trading off what we saw yesterday. And yes, the sell-off at the end of the day was very strong, very computer-driven, very algorithm-driven. But you have to have your strategy going today. So if I want to be a bear in today's market, which I was bearish yesterday, oh, we could talk about my options plays. Yeah, as the SPY was going up to 402, who entered puts on the SPY? $387 puts. SPY's at 402. I'm buying 387 puts that expire today. Yes, I got in and out, so I'm not holding them. But here's the catch. I got in at $25 per contract. $25 per contract. The SPY sitting at 402. I've got 387 puts. I'm way out of the money. I paid $25 a contract. They went down. I bought some more at 20, bought some more at 17. They went all the way down to $11. I tried to buy 2 more contracts at $11. If I don't die, then the market turned around as the SPY is throwing up on itself. 397, 396, 395. My $11 contracts, because that's as low as they were going up. They're $30, $33. I say to Discord, hey, I'm going to sell these for $41 a contract. My average is like $20. I'm going to sell them for $41, 100% return. And then I say to myself, no, if the market's obviously throwing up on itself and these keep going up by a penny and they're so far out of the money, let me set my ask for $49 a contract. Again, I'm in at an average of $20 a contract. The SPY is dropping. I set my ask for 49. I get it. It hits 49. I just made 150% on my trade. At the close of business yesterday, I looked how much those contracts are worth. Again, I did an amazing job. I'm positive myself. Got $49 a contract. They are up to $64 a contract at close. Now, I would never want to hold them overnight because what do we see? We saw like a bounce this morning, and that's not a surprising bounce. And then you get what's going on today. You got testimonial in Congress. I think the TikTok CEO is talking to Congress how they don't steal our information and pass it along. Of course, stocks like Snap and Meta and Pinterest are ripping up this morning. No good for me because I'm in Snap puts, and I do expect Snap to go down. And after all this bullshit is done in Congress, I actually expect Snap to go back down. Why? Because you know how hard it would be to ban TikTok universally in the United States, just to say, okay, nobody in the United States can use TikTok anymore. It would be almost impossible to enforce. Okay, with that said, a couple other comments. We spoke about the SPY. We spoke about SPY ranges. I did take some good notes yesterday, so I just want to make sure I don't miss anything. Okay, there was a $120 million call on the SPY that came in right prior to 2 p.m., the FOMC. What does that mean? Well, it means that $120 million spike, what they took is that spike. They took that market manipulation, they pushed it up to 402, and then they secured all the profit that they needed to. Here's what I shared out to Discord yesterday. Yesterday, 3:33 p.m., I was looking at coin puts, $60 puts expiring April 6th. And there were $1.06, $1.07, or $106, $107. Again, they're going to be worth this morning, $60 puts. Coinbase is dropping to $67, $66 pre-market. These puts will probably be up to $3, $3.25. So in at $1, out at $3.25. I mean, if you like making money, again, not all of my alerts are on fire. Here was that SPY one there, sold 49. It would have been much better if I picked up an additional $2 at $11. I mean, it is what it is. Not all of my trades are perfect, but all of my trades have strategy. All of my trades have a reasoning why I think they're going to go up or going to go down. I've got this minuscule account, this mini account that I'm trading. Again, started out with $100, trying to grow it to 200 last week. Hey, congratulations, 100 to 200, did it. This week, I'm like, okay, let me grow it from 200 to 400. I'm damn close there at 374. Again, I'm taking it slow. Here's how I changed my investing. When I'm managing a smaller account, I don't have all of the backing that I need. Say I'm managing my regular account and I'm wrong about something. I'm like, okay, well, I'm just going to go down. I'll double down. I'll buy 40 more contracts. The wrong way to trade. So I'm reteaching myself. This is the right way to trade. Whether you're trading a $100 account, $200, $400, $500, $10,000 account, it doesn't matter. You shouldn't change the way that you're trading. If I'm trading conservatively with a small account, when I'm trading much more money, I should be trading conservatively. I should be like, oh, fuck it, I'm just going to take a risk. I'm going to throw $5,000 on these SPX puts or SPX calls or whatever it is. Oh, if I'm wrong, screw it. I still have $55,000 left. No, that is absolutely the wrong way to trade. You should trade like there's a gun held to your head, a knife to your neck. If you make this error, then you're going to go down. So that's the way I just suggest trading. Ever since I changed my trading style, so much better. Now, yesterday, before close, now the price of the SPY was $392.35. Okay, so understand we're sitting at $394 this morning. Quant data identified an unusual SPY sweep that expires on April 14th. So again, it's going out 1, 2, 3 weeks, okay? 3 weeks, 10,000 put contracts with a price of $68 each, paid for at ask, okay? When you're buying put contracts at ask, that is bearish. If you're selling put contracts at bid, that is bullish because you're unloading these contracts cheap because you know the market's going higher. So again, this looks bearish to me. That was at $392.35. As we sit this morning, you're looking at the SPY, it's probably $394.87, approaching $395. So when I tell you I'm looking for the SPY to bounce to $395.50, something to that extent before rejecting, again, the dark pool levels, $395.35. So that's what I'm looking for as far as that goes. I noticed that. Okay, so Fed will keep reducing the balance sheet as planned. Yes, because understand the Fed with their quantitative easing, quantitative tightening, QE, QT, right? The Fed's balance sheet went from $3.5 trillion before the pandemic all the way to like $9.4 trillion. Yes, they've reduced it since they said they were going to start reducing it, 9, 12 months ago. So their balance sheet is still at $8 trillion. So yes, they went from 9.4, let's say they're 8.1 trillion, right? They reduced it. Congratulations. They reduced it by 12%. They want to reduce it by 8.2 trillion back under 4 trillion to 3.5 trillion. Well, shit, they have to reduce their balance sheet by 50%. So it's great that they might have reduced it by 11%, but they have another 50% going. Now, if the Fed does that, it's going to remove liquidity from the market. It's going to put more downward pressure on the market as they just raised a quarter. 25 basis points, it should put more pressure on the banking stocks. However, the banking stocks seem to be kicking back into a positive gear this morning. Understand, a lot of people say banking stocks go down, market goes up. Banking stock goes up, market goes down. That is not the case. Banking stocks will be leading the market. So again, am I going to believe a one-day movement for an industry like the banking stocks that they're going to rebound this morning off of a dead cat bounce? No, I'm going to let it play out a little. When I see banking stocks regain their footing and people aren't talking about a banking crisis or a run for the bank or what is the Fed or the SEC going to do or the FDIC, then I know banking stocks can be strong. They can take the market higher. With that said, let's remember, somebody asked me, I don't remember the gentleman's name, but somebody asked me about Ford yesterday. So this is what I want to show you. I'm going to go out of the month. So we looked at yesterday's chart on Ford. And as going into yesterday, I said there was a pretty large sell-off for 2 straight days. And then the day before yesterday, they were buying it and we spiked back up. And I said, well, here's the thing. It's going to follow the market trend. If we were green yesterday, Ford would have spiked back up to like $13. However, we sold off yesterday, so Ford lost another 2%. Then they came out this morning and they said they lost $2 billion on electric cars in their company over the past 2 years, and they're likely to continue that and lose another $2 billion this year. Well, shit, Ford's telling me they're going to lose $2 billion on electric cars this year, and the stock is up 1.57. It was up a little higher this morning when I noted that story. So again, people are talking about, Will, what are you going to do with Ford yesterday? Well, I didn't know based on the market. So again, market went down, Ford went down, volume light. I don't suspect that everybody's going to be jumping right back into Ford. I was looking at Carnival and some other stocks like that. All right, anyway, so let's talk about some other stocks that I've got on my watch list. Again, Nike. Mentioned Nike yesterday morning, right? Because Nike had earnings. I mentioned that their inventories were up 16%. Their sales in China were down 1% year after year, and their gross margins were down. Well, shit, that sucked for Nike. So it was down 1% yesterday. It ended up dropping what? 4% yesterday. Looks to pop this morning. It's up 0.67%. Would I believe it? No, because again, any pop this morning, I'm going to assume those same computer-driven algorithms are going to continue to sell off stock until we hit a nice volume of sell-off. And again, we got to 120 million on the SPY yesterday, but if you remember yesterday, in the early afternoon, we were at 40 million, and I'm like, today is extremely light, even with the Fed day. And when the Fed announcement comes out, we're probably going to see strong volume to the end of the day. Well, look at that strong volume. Focus on that strong volume the last hour, 2 hours, and specifically 20 minutes of trading. It was all downward pressure. So the fact that we're up a little pre-market, and I tell you, the amount of trading that goes on pre-market and after hours is less than 1%. So again, all of that massive trading pushed the market down. We have less than 1% of the market's trading, taking the market higher on our bounce. So what are you going to believe today? Again, I'm trading without emotion. If they want to push the market higher, okay. But I've got my key inflection points in mind being 395.35, a dark pool level on the SPY, plus or minus 20 cents. So what kind of questions, comments we got today? I might buy some Wish today. So yeah, so Wish, I think, went to 38 cents and change yesterday. I think it closed around 39 or 40 cents. Again, my average on that stock is 0.4437 or something like that. I'm in stock only. I have 10,000 shares. Okay, 3897. And right now, pre-market, it's at 40 cents. Okay, let's just say 40 cents. I'm down 10%. I've bought my full position on Wish. I went in with 2,500 shares, and then another 5,000 shares. That's it. That's all I wanted to buy. I don't need to be $30,000 into Wish. I'm into Wish for $4,400. More than enough information for me. Okay, let's talk about what do we got? Tesla calls. Man, again, you're talking about tech. So tech's doing a little better than the Dow right now. So people will say, okay, well, Apple, Tesla, Netflix, Google strong, Amazon strong. I mean, yes, you can intraday trade Tesla calls, but if you're going to get into Tesla calls for the next 1 or 2 weeks, I'm thinking you're paying way too much for the IV because Tesla could be right where it is now. Let's just see. It's at 195 right now pre-market. Let's look at the 1 month chart. Okay, 1 month chart. Here we go. Boom, boom, boom. Outflow taking Tesla to 174. Okay, so let's say it was oversold. Great. It went from 174 on March 10th all the way to yesterday, which was the 22nd or 21st, which is 2 days ago, all the way up to $202. So 174,202, you're going up 28 points. You're talking about a 15% swing up. So yeah, I don't want to get involved, just like the same way as Amazon, Google, both went up 15%. I want the market to settle down. Yeah, so I spoke about coin tanking already and why it was tanking. Oh my God. It's even tanking more. I mean, it was at $68. Now it's at $64. Those $60 puts for April 6th would have just been ripping. They'd probably be up to $4 today. So let me explain why I got of those. I was in those 2 days ago, and I thought Coinbase was going to drop. And then I saw Coinbase go up 80 cents, 70 cents from my entry position. And my contract was only down $1. So I said, wait, the stock is going the opposite way. I can still sell my puts for a $1 loss. Shit, let me sell my puts. Now understand, those puts that I went into went from $1.25 each all the way down to 82 cents. This morning, they're probably going to be north of $4. But the point is, I did not want to ride the elevator. If I'm in at 125 and it goes down to, let's just say 85, right? That's $40 off. That means I'm down about 35%, 34%. Now, if you like looking at your phone going, wait, I'm down 34%, don't worry, it's going back up. I don't. I like saying, hey, I sold at 125. Oh, it's 85 now. What a perfect time to buy back in. Again, I thought about buying back into those coin puts. It went up to 102. I posted at 106. I'm like, listen, it's getting really good. However, if the low was $82 and I get in at 106, it's already up 29% from the low. So me being such a stickler and stubborn person, I said, shit, I don't want to go in 28, 32% off on the bottom. I need to be closer to the bottom so that I can say, hey, I got in close to the bottom. Okay, so Carvana. Josh mentioned Carvana yesterday. I expected a spike from $7 in Carvana to $9.50 within the next 2 weeks. My options expired last Friday. Some people's options expired this Friday. Congratulations to them. But I mentioned that I would have sold Carvana at $10. Why? Because you could have bought it back at $8.82 this morning. Yesterday's spike was a little ridiculous, all the way up to $10.25. So again, it's great to be in a good position, but you have to know when to sell your position. Get out, get in. Let's see. I'm thinking of long puts on NVIDIA for September. It's been running well. It has to cool off. You're not the first person to say that over Stand Reality. Understand, people have been talking about NVIDIA puts ever since it hit 245. So now we're at 270. So yeah, you're in a much better position to do longer term puts. But there are people that had the same thought process when NVIDIA was 245, 250 and said, I'm good. I'm going to go out 9 months. I'm going to go out 6 months till September, October. I'm going to buy these longer dated puts. I'll pay up for the IV because I know NVIDIA is going down. So here's the catch. NVIDIA probably will go down. Price targets have increased. But again, for NVIDIA to go down, you have to expect the whole market to go down. It's like if the market stays in the same range from 390 or even 380 on the SPY all the way to 410. Let's just give it a wide range. 380 to 410. If it stays in that range, even if NVIDIA gets sold off, you're not going to see NVIDIA drop more than, 12%. So let's say it's at 270, 12% would be 5 is 12, about $39. So you're talking about 270 to 230. Again, we were just at 230 the other day. So, and you're talking about a complete market capitulation. The market would have to go down to 380 for NVIDIA to be at 235, 240. So again, if I want to play puts, I want to find something that is less attractive. And when I say less attractive, I mean like Tesla, Apple, Meta. People really like those stocks. I want to look for a less attractive stock. I'll bring one up. Remember the other day, Affirm, AFFIRM, Affirm was up 14%. And I said, Affirm, they're a buy now, pay later site, and 47% of their customers have missed or been late on a payment. Well, shit, they're a buy now instead of a pay later site. They're a buy now, pay late site. And that's just not a good company model. Okay, so we talked about the SPY. Again, let's just see what I'm thinking. Let me just look at where we are pre-market on the SPY. Again, I'm watching banking stocks this morning. The SPY is up 0.58. So 394.37. I thought we were just at 395. How did that happen? Okay, 394.38. Again, two scenarios, and we'll close on the two scenarios. Bold case scenario is you see a drop to 393 right out of the gate, and then we see a quick spike within the first 20 or 30 minutes to 395, 395 and a half. I would expect rejection. I'm expecting a narrower range today. Again, all the excitement from yesterday, all the high volume from yesterday is to play out. Here's what you want to keep your eye on. SPY, SPY, SPY. You want to look at the volume. By 10 a.m., if we're under 10 million on the SPY, it's going to be a low volume day. What is a good volume day? We'd probably be at 20, 23 million on the SPY, 10:05 a.m. If you see that, then believe the path that you see. If the market is looking strong, it'll get stronger. If the market's looking weak, it'll get weaker. When we have days where volume's extremely light, it's easy to manipulate the market. It's easier to have people think, the retail trader, you and I, think the market's going up. Hey, the market's getting strong, going up, or the market's retracting. So again, keep your eye on the SPY, keep your eye on the volume, keep your eye on the dark pool levels. If you don't know about the dark pool levels, after you hit like on the button below, make sure you join our Discord. You can look at all the dark pool levels for all of your stocks. And again, join me tomorrow.